For long, we've been used to the assertion that Ugandans are poor savers. However, this is fast changing. At least if you go by the numbers from the insurance industry, especially the life side of business, which is a key line for mobilizing savings, this picture is fast changing. For the first time in the recent past, this branch is growing by over 30%, which points to the fact that more Ugandans are actually putting aside money for tomorrow, which is saving. But that's a discussion for later. This is Money and Markets, and I'm Charles Board, your host. You're welcome.
Coming up on Money and Markets.
One of the parameters for measuring progress in an economy is the entrenchment and growth of financial services. One of these services is insurance. Now, Uganda has been grappling with entrenching this service in this economy for quite a while. We'll look at the milestones so far covered, specifically paying attention to life insurance. Emma, welcome to Money and Markets. It's nice to have you on the show. Now, life insurance, if you to rate it, on a scale of 1 to 10, how would you rate its performance in Uganda?
I would place life in different segments. One is with regards to market outreach. I would give life 7 out of 10. In terms of flexibility and designing products that meet the market needs, I would give life 9 out of 10. With regards to efficiencies when it comes to claims payments and the like, I would give life about 7 out of 10. Overall, though, I would say I would give life maybe 8.5 out of 10.
And then we see the life side of business trailing the general side of business, general insurance. Why is this the case?
I think I should say specifically, though, that life in Uganda is the fastest growing industry, averaging about 34% over the last 5 years. You'd be very hard pressed to find an industry averaging such growth rates. And when you compare it with the general business, for example, in 2017, the general business grew by 14.5%, and the life industry grew by 27%. That tells you one thing, that there's actually a lot of potential in the life. Albeit the reason why the life is not as big as the general insurance is that virtually there is no line of life business which is regulated or which is mandatory. So you find that for life insurance, you have to typically start from the scratch.
When you talk to a number of Ugandans who were keen on following life insurance back in the day, in the 50s and 60s, many would tell you that this city was built on savings mobilized from life insurance. Now, today, what can you share with Ugandans as a contribution of this branch of insurance to the wider economy?
Now, I think the biggest area for growth that we've seen now is actually the word of mouth. We have a lot of clients who have benefited. We've saved a lot of livelihoods of the population, just by paying out a death claim. That then goes a long way in ensuring that the children of whoever was insured then continue in school and have the livelihood that they actually require to have. But above all, we've seen that life insurance really rides on trust. Now, of course, as we learn, we've made a few mistakes here and there, but with the support from the Insurance Regulatory Authority, we've now sort of become a bit more strict in terms of recruitment of agents. So much as the life insurance companies have the largest sales force in the industry, that's a form of employment, which also impacts positively on the economy. But above all, we've also continuously tried to equip them, continuously train them and certify them such that they can actually provide the relevant financial advice to the clients out there. Now, that's important for growth as well, but we've seen that it's also sort of giving us a push in the right direction.
From a pure investment side of things, when you look at the investment vehicles that this economy presents, do you think they're enough for you to mobilize enough money for your savers and then for your operations?
Well, that's a good question. I would say yes. The market for now presents a few investment vehicles that we can use, and I would also specifically state that by design of life insurance, we are heavily regulated because we provide a promise. So the regulator is very much interested in ensuring that actually we are able to meet our promises to our clients. And for us to be able to meet our promises, specifically we need to ensure that one, we have access, ready access, so liquidity is key. But then two, there must be a level of comfort in terms of the protection of the capital that we invest. So we have an investment model that is prescribed by the regulator that we actually apply. Now that investment model, well, is restrictive, but with the intention to protect policyholders. So most of it is really skewed towards fixed income investments, which is what the market currently offers. As you very well know, we still have a very small boss. There are very few listed companies, so that also limits us a bit. So you'll find most of the life companies investing heavily in government treasury bills, government treasury bonds, fixed deposits, and in some instances, life companies will also place some funds in on the stock market, on shares. We are restricted geographically, so we can only invest on the USE. Then investments will also be in property in some instances, but to a limited extent. And I think with the advent of risk-based capital requirements, that might become a bit tighter because you have to then match your investments to the level of risk that you're carrying. So in a way, I would answer yes and no. The market provides opportunities, but are they sufficient enough for growth? I would say yes and no, because yes, to the effect that yes, the government for now has been a bit hungry for funds, so the interest rates have been fairly high, competitive. So every policyholder out there is actually actively assisting the government in doing community projects. So in one way, that is a plus. The other way, of course, is that we still have a very limited involvement in the private equity market. So it's a bit restrictive because now that's where you expect to get the biggest gains. So if you're restricted there, then it's sort of a straight jacket that the life companies have right now. Thank you.
Nice talking to you. On this show, we've shared with you the different activities that are transforming the coffee subsector, from the farm to processing to export. Today, we pick the mind of different players on what they want to see on the policy environment side for this sector to be transformed, and what effort they are doing to also contribute to that transformational journey for the coffee subsector. Uganda has already set its eyes on the delivery of 40 million bags of coffee from the current 4 million bags. The discussion among sector pundits has, however, moved to the type and form of coffee to be produced, away from just the anticipated volumes. All this is informed by the need to have the country derive more benefit from the crop.
If out of the 20 million bags we aspire to get, if we can get, for example, 60% of that in screen 18 for Robusta coffee and double A for Arabica coffee, Uganda will be very far.
To attain the milestone, players assert that special attention has to be paid to certain critical elements, which in some instances are already being addressed.
World over, to have very good quality, you need people who are organized. Uganda is basically a smallholder farmer coffee farming system, and therefore once you have this integrated individualistic farmers, first of all you will have very low volumes, and importantly we've seen the quality deteriorating. But when we see more of now farmers coming together, thanks to some development partners, but also the big push by UCDA, we see the quality improvement.
The other issue is with ensuring that all stakeholders, including farmers at the grassroots, get a fair share in the benefits from the coffee crop.
These farmers have cash needs, but whenever they will need money to support themselves, maybe from money lenders or middlemen or other traders, the traders will give them money to them, will lend the money to them at a higher cost, rather at a high interest rate. But also the traders will lend them money and the farmers mortgage their coffee farms to them.
To development partners, this is critical, and it's partly the reason why some of them have targeted the crop in their interventions.
Now, you will also realize that our approach in terms of agribusiness, we've been, basically our aim, our objective is the Ugandan producer, the farmer. That is our aim by our donors who happen to be Denmark. They really want to see a reduction in poverty and increase in income at household. It has an impact in terms of export returns, because that's also one of the parameters. But also it was assessed and found to have a very immediate impact in terms of creating income for the producers and also in terms of value addition. So that's how coffee was chosen. And over the years, it has become our flag bearer in terms of investment. It takes close to 40% of our investment in terms of interventions.
In the same breath, several sector players now have organized broad array of interventions as a build-up towards attainment of the 20 million bags vision, but also grow benefit to all those involved in the sector.
By the time we came in our intervention, that's like 10 years back, most of the coffee trees were really so old and the production was really low. So by then the average tree was giving something like 0.5 kgs per tree or half a kilo per tree. So one of our first intervention was to help farmers to start stamping up their trees, because we're looking at trees which are 20 years, 30 years, 40 years or even 50 years, and most of them were inherited trees from their grands and grannies. So now the key intervention was, well, let's first stamp the trees and re-look at rejuvenation. We've seen transformation from now 0.5 kilos per tree to now 2.5 kilos per tree as average. And some of the farms are now even doing 10, 12, 15 and even 20 kilos.
On the market side, where Uganda sells its coffee, some farmers, as they say, have already smelled the coffee and are doing all that is needed to attract premium prices for their coffee at a global marketplace.
Specialty coffee we do is fair trade and organic, but above all, also in terms of quality, we make sure we ship coffee with 0 defects, and at the same time, the harvesting and the post-harvest handling is done so well so that the coffee is clean and good, to make sure that we score highly when it is graded.
The story of coffee in Uganda today offers testimony of how a combination of deliberate efforts from the regulators, the private sector, and development partners can transform Uganda's agriculture. Most importantly, though, it offers insight on efforts already being done to ensure that Uganda attains the 20 million bags production vision and the right quality.